Okay, is it fine like this? Okay. Thanks for coming out on this Friday. That's great. It's fine? Okay, cool. I feel like it's I like actually introduce myself. I'm Sharon. I'm from Buteau. And these are things I've seen before, but I don't actually know your name. And it's unfortunate because we always like interact when we come to him. Maybe we could introduce each other. And then it's such a small crowd.
So I'm Abhishek. I work at ICON.
Okay.
I've been with the rest of the
Huh.
I work with the emerging assets, working after the non-profit.
Okay. You've been actually asking the question on Chit. I'm so sorry. You still need to ask more, because this is actually an opportunity, because I want to take insight from people who are actually writing the report now. And I'll discuss it later.
I'm Chit. I work with CBS.
Okay.
And we're working on a project on housing finance, actual finance and loans and neighborhoods.
Okay.
And we just completed the work actually.
Okay.
So I came to this job hoping to find out something about what the loan should come in terms of housing finance.
Yeah. This is very important. Because you probably heard the word and all that.
Yeah, this is an idea of one of
the important
sources of housing finance.
Okay. Cool.
I am Buteau and I am working with the ICS, the funding team.
Okay.
We were just moved into ICS and we're working with the Smart Trust from last few years.
Oh.
And rather, it's the
At SCFC, I am working on other aspects of the Chit fund research.
Values and also on the SCTV and entrepreneurship versus I'm working on the same goal
We're actually interested in your insight. So today's presentation, I don't have any magic bullet actually. What I'm gonna discuss is a bit of a teaser because it's just a very high-level summary of some of the results that we have. We actually have a first draft of the report, and this is what I hope that after you see this PPT, it'll be alluring enough for you to come to our website and see, okay, what's the rest of the story? And also today to get feedback on it. We just sort of like completed the data analysis. You know, fieldwork takes more time than we thought, and also analyzing the data. Also, I like coding and all, and looking at the code. Just as a brief background, I'll explain shortly a little bit the history of why we actually went into Chit fund. What is a Chit fund? Why is this unregistered Chit fund? What is the role of Chit fund? So those of you aware, SFC has started a project on registered Chit fund industry. And there's actually a Spark session maybe last year, 2 years ago, actually on the initial results that we had, that it's actually something quite prominent as in the formal sector, not well known. It also is very known in the informal sector. So there's two types of Chit funds, there's registered and unregistered. The registered ones are the ones like the well-known companies like Sharon, they would go Sharon Chit. In Chennai there's Buteau, in Andhra Pradesh there's Magarashi. And the goal was to, the initial interest, this is funded by a Bill and Melinda Gates Foundation, and their initial interest in the Chit fund industry came across when we discovered that a lot of these small businesses, when we asked what is the source of finance, a lot of people mention Chit. It's also housing loan, but people are very poor, and like these micro entrepreneurs, they also have diverse sources of income, and they have like multiple things in their portfolio, and Chit fund is one of them that they use. They use it for the house, but also for the small business. So that's probably why, you probably have interest in what you put in the savings, certain savings and borrowing. So from that, we thought, okay, and when we actually sort of like looked at the history of Chit fund, we thought, oh my God, this is a model that's been used for a long time in India. There are stores mostly in South India, in Kerala it started. And actually it has improved a lot of the development. A lot of people have actually grown their business with the Chit. It's sort of like a rule of thumb way to grow, and there's a lot of really smart things that can be learned of something that's already ingrained in the rural culture. There are some good, bad, and ugly stories about Chit. A lot of you probably heard of some rumors and things like that. What I would highlight is a lot of them actually are not from the registered Chit fund industry. They might be from the unregistered Chit fund industry, there are things different, and they also are probably other types of schemes that are not even in Chit. anything that was sort of like fraudulent in finance, people would just put Chit problem. And I can say that because one of the things that our research has been sort of like, we're not lobbyists as everybody who was researching, we're mostly more objective research, but we're really glad if our results go into like the policy levels in government. And the professor who heads this project, Professor Unregistered, he has spoken a lot to government agencies, and in particular at RBI, in trying to alleviate some of the things in the chip fund industry that prevents people to grow it because they're highly regulated. And one of the things that one of the RBI representatives said, I don't want to do anything with chips because they're very bad and etc. And they're very fraudulent. And one question that we had is, how many cases last year of complaints against chip fund industries, registered chip fund industry, have been given to the judge? She said, no, I don't know. He said, I'll tell you the truth. And he asked after she replied, he said, how many cases against banks have been like put forward in the past week? She said, I don't know, he said, I'll tell you 600. So it's just like a perception issue. Now, I'm not saying that chip funds are better than banks, but obviously a bank is more structured, is more accessible. There's a lot of learnings that can be done, in particular to help enhance what is being done in the microfinance area, where they're trying to integrate savings along loans. This is actually a borrowing and saving mechanism. And so that was the initial research. So what we discovered is the registered chip fund industry is actually quite common in urban and semi-urban areas. And they have fostered a lot. Unfortunately, regulatory issues prevented them to cater to low-income households. But this is something that they can easily extend to if they have the opportunity and they have lower regulation to be done. Because the government was quite high on them because of this perception of a lot of them are cheap, etc. For example, every transaction they do, they have to report it to the registrar. So if there's 40 members in a scheme, it's like highly regulated, everything is looked at, and they have very little liberty to do anything. So that makes the transaction cost very high, so they would rather cater to higher income people, which they do. But also higher income people, they will also have more access to banks and actually loans, and it will be more facilitated. And right now they're functioning on people who grew with them with the chip. So probably person like 20, 30 years ago they got a chip and they continue with them and they're willing to take 2 lakh chips, for example. But that means that their customer base at the end, the younger crowd, they're not into, so they're in danger of sort of like not being able to replicate their model. They will have like a shorter lifetime. But one thing we want to see is these people actually, they have great ideas and there's a lot of information in this type of model. And we want to see where there's a large population that's already unbanked in the rural area, and they already know how chips function. They have this basic understanding of how it works, even in the informal sector. So I'll just quickly mention for those, actually who knows how a chip works? Would somebody attempt this? Would you know? Actually, what would you describe it if you would?
It's a set of people, pool in money. Typically, if it's a 40 member fund, then you're talking about 2,500 people. It's a life system.
Yeah.
So they have a series wherein, once a month, they have an auction. Where they would auction out the collections, and it can go for up to 30% discount, and it's shared amongst everyone, 40 members. They would proratedly pay out to the 70,000. So in this manner, each of the 40 gets to get the auction once in 40.
Yeah, that's exactly it. Everybody understands like the basic scheme. And until you bid, you're actually a saver because you actually deposit money. And then after, when you actually win the pot, it's sort of like a loan because you're not doing most of the fully. So that's why it's called like saving/borrowing mechanism. And at the base of it, it's actually a smart system because it just rotates money. And it just rotates the money in the villages without having cash infusion in it. It's just a clever way of going together. And that's probably why it was a nice model within the village when the banks and things like that did not have access. And that was the idea to say, okay, there's still some rural areas that are really in need of finance. And let's see if they can be registered. Because registered, being in the formal sector, that's the first step of integration in sort of like an informal institution. A lot of them don't have bank accounts and all that. They might have this post office account because NREG and other issues with the government, so they don't utilize it. And this system is okay. And the idea came about is to test whether we can put a registered Chit fund in a village. And given the knowledge that they already know about unregistered Chit, and if we explain it sort of like the difference, the registered one is deformalized. We're also in discussion to see if we can actually have sort of like a credit report for them. Because there's some areas where banks actually accept it from a Chit fund company, registered Chit fund company, sort of like a credit assessment to say, well, were they good payers, etc. These are more anecdotal things, it's not a formal thing, but one of the things that we hope to do is to integrate that. And actually, Abadan is working on credit scoring models for Chit funds. And this way, one of the things that benefits them of entering into a registered Chit fund is to be able to have this credit worthiness rating that can be utilized after to build a credit history. And everybody wants to get a good credit history, it was easier to get better bank loans. So that's sort of like the ideal of sort of integrating. When we first saw this ideal with the registered Chit fund industries in urban areas, they said, no, it's too difficult, transaction costs are very high in rural areas. We were very lucky actually that our funders were able to actually sort of like control for those transaction costs and allow, like by paying for it, and allow the urban companies to actually experiment in the rural areas. So we identified 4 states and where we wanted to conduct our experiments, and I think so one is in Tamil Nadu, one is in Andhra Pradesh, one is Karnataka, and the other one is in Maharashtra. So the idea is to go to different states and to test like maybe if there's differences between states or different characteristics and see how it goes. So the idea, first of all, so we wanted to know is this is how it came upon our unregistered Chit fund survey. Before entering and putting our experiments to put a registered Chit fund survey, the idea was we wanted to probably test one scheme, build it up, see who are the potential members, how people react to it, how people pay. Because one thing we observed is people do a lot of lump sum payments. And one thing is if you do a lot of like finance in the low-income household, it's much better for these people if their payments are matched with the way they receive the money. If they receive daily salary, their payment should be daily. If they receive weekly wage, it's easier for them to pay their loan back weekly, etc. Else they're not that good at planning, so they have like a lot of budget. So the first step, and we thought like, okay, let's see what is the interest in Chit funds in these villages where we want to implement our experiment. The choice of the areas were mostly guided by their Chit fund partners, where there was a Chit fund company that we identified in the area. For example, one was in Kalachi, and we said, okay, which villages would be interested in testing a registered Chit fund? And they helped us select a couple of villages and randomly select one village where we want to conduct the experiment. Before doing the rural experiment, like we did an unregistered Chit fund survey to see like, okay, how many households at least participate in registered Chit funds? But also in the survey, we also asked to participate in registered Chit, and it's very low, it's less than 1%, so it's actually not that knowledgeable about it. I'll show you the states we went. So we did in Maharashtra, we did Tanzil. That's a bit, it's actually Mohapara area. It's a bit outside, and Tanzil is at New Mumbai. Actually, we did some. It's this technology. In Karnataka, it's the city, the village of Shimoga, where we went. But Shimoga is a city beside Rome.
Yeah.
It's a city place.
We are also Shimoga.
Yeah, it's also Shimoga, the village. In Andhra Pradesh, it's the outskirts of Karnataka. Actually, we had to change partners. I didn't have time to update the results. It's updating. But for Andhra Pradesh, anyway, it was interesting because we collected information in that area. And in Tamil Nadu, it's in the outskirts of Kalachi. The idea is it couldn't be too far from where the registered Chit fund company actually is because they want to observe also. So these are probably in the range of 20 kilometers outside of the area. And we visited the villages now. So let me discuss a bit the methodology, what we did. So it's very hard. You cannot just go to a house and say, do you participate in unregistered Chit fund? Because everybody's going to say like, oh, why am I being audited or something like that. So we initially went to the village and we did a full we actually went and counted the number of houses in the village. We had people, because government did census and all, but it's not that rival people ship houses, etc. So we actually had a team of surveys go and just like, okay, identify all the households. And we actually had the surveys also do a very short interview, like not even a 5-minute interview, saying that they're doing some type of social survey and they want to know what activities in the household. And there was like a questionnaire, about 5-6 questions, where they're asking, do you participate in social activities? Do you participate in religious activities? Do you participate in the Chit fund? Do you have, we kind of like just that. Yeah, we stuck it in, so people would not have a doubt. Even though it's hard for villagers to get it, like a yes or no, because we sort of like disguised it to see, okay, like the true revelation, knowing that many times people won't say yes anyway. So what we did is, if the person was present in the household, we wanted to speak to an adult in the household. So it was that household that was asking, someone participating in the Chit fund. So which means that our incident rate is for household incident rate. It also means that the limitation is, because unregistered Chit is something sort of like a bit secret and informal, it could be that the mother participates in unregistered, for example, for a daughter's wedding without telling the husband. So what we have is the lower ground. Like a bottom estimate, because I think it's much higher than that. But we just wanted to use this method just to make sure that we thought, okay, at least people who know your business in the household, they would know. I think to give this some type of measure, this is more like a lower benchmark, lower bound. After what we did is, among the people who mentioned that they participated in the Chit, we surveyed them. We went back and we did a full survey. And the attrition rate was quite decent. There was probably only maybe 10% of the households that did not want to do a more in-depth survey. This was a survey about 45 minutes that we asked them about their demographics, their household expenses, their sources of income. We also asked them about their unregistered activity, the types of loans they have, the savings. And people were actually quite friendly and generous, so that wasn't a problem. And also the initial house system also, when the person wasn't there, we went to normal thing, we went 3 times to the household, just to make sure, if not, then we go back walking it into it. And so let me present you. So today I'm presenting more the demographics and a bit of the very highlight of the results that we have. And if there is something sort of like that seems weird or prompts any questions, please let me know, because we'll take note. Because like I mentioned, we actually drafted the survey, and we're refining it and analyzing more stuff. And we'll probably put into it, because if you have questions, pretty sure everybody over there will have some. So just help us just to refine things. So this is their survey. So the incident rates of unregistered Chit, so there were household use Chit. So we have overall 17%. Andhra Pradesh was 7%. Tamil Nadu 24%, Karnataka 29%, in Maharashtra 17%. I'd like to note that Andhra Pradesh, the time that we did this survey, was the time when, in the middle of the microfinance crisis. So anybody was a bit like, especially in Andhra Pradesh, it was a bit like, why are you asking this, etc. So we think that a lot of people were not reporting as much that we thought. But at least the people who reported it, we thought it was good insight, because we probably thought it was useful. These numbers, Tamil Nadu and Karnataka, I think the Chit funds mostly come from these 2 areas. It started here, like Sriram, started here in Tamil Nadu and became quite popular in popular model and things like that. So mostly that thing. One state that's not there is Kerala, which has lots of Chits, but they're government-owned Chits. So this is actually kind of biased to the results and things like that. But there's interesting models that can be done there. And then we have Maharashtra. Maharashtra, because it's a bit of a different model. These are more like utilized by men. In the state of Maharashtra, the concept of Chit is not that popular. We had a problem actually figure out, and we were questioning, okay, should we go there? But we thought it'd be an interesting model because we wanted to see how it's done in a state where the Chit fund model is not that well known, and that'll give us insights of how to integrate it in other states. In the north, the Chit fund is not very known. I visited a Chit company in Lucknow, and they said they're basically functioning on like a network or contact with people they know, and it's very hard for them to extend because of the lack of knowledge of people over there about what is the Chit. Microfinance is the more known thing, self-help rules and things like that. So we said, okay, let's do Maharashtra to see how to go about. a bit about the demographics. So, the average Chit fund user, it's about half male people. One thing that's very different from the register is the gender. Usually, what we observe in the urban area, in the registered Chit funds, it was like dominated by men. It was like over 85% of it.
No, it's 60-40, but the thing is again, it's about a lot of men actually buying tickets
in the name of their wives, yeah. Yeah. But that's for the registered. So that's a pretty good subject. One thing actually that's very interesting. So the primary occupation, people are self-employed. Almost half of them are self-employed, and then after you have 36% wage labor. 10% salary employed, and others, it's like retired people or students that would benefit. This is actually interesting result because it actually shows the basic of what a Chit fund is. So Chit fund, remember, it's a saving and borrow mechanism. So people who want to borrow, actually, they're self-employed people. People who want to save, usually they're wage laborers. So these self-employed people, and it's really important for the Chit fund, for a Chit scheme to have a balance between both. And this shows almost like a natural balance. It's not like people like select, and we've actually tried to investigate, is it the Chit people that actually try to balance it out? Because we talked to a lot of Chit members, Chit managers. Some people do it via agent, and some people actually, the branch manager, don't know exactly what is the ideal composition. Because if you have too many, salaried people, nobody will bid. If you don't bid, you don't get high returns. So, and you need people, this mixture of people. So that's actually quite an interesting, important result because it's sort of like also the rules of thumb in the way that the schemes are managed in the unregistered areas and green homes. The level of education is actually, a lot of them have less than 9 years of schooling. Illiterate is, less illiterate also is people actually who know probably how to read a bit and write, but no formal schooling. So we mostly ask about formal schooling. One thing to notice, the average age is 37 years. So this is actually quite high, given that the average age of people in India is like 24. And this means also that it could be a couple of things. It could be obviously maybe people who are older are interested in this type of thing. It also means that if we're only on this network thing, maybe the next generation won't be interested because of the lack of knowledge about this mechanism. So this is why it's important to see what can be utilized and how it can be promoted and save the information have, because like I mentioned, it's a model that's very interesting. That has function, has proven. It has its caveats, but there are certainly interesting learnings. And in the register, I think the register, the average is about 43. So if your average age is about 43, and that's like much higher than that, so that means it has to be also to be used, to be used. So the profile of the membership. So we have the monthly income. One thing we know, and everybody who does like field work knows that it's extremely difficult to get this correct. Actually, the income and the expenditures, because there's a lot of like they claim that they spend like year overall like 5,800 and they earn 9,724 and they have like a huge, so they should be able to save a lot, and yet a lot of them are in debt. This is not a surprising result in the sense what's interesting is relatively to other states, then you can compare this. Probably everybody has the same bias in reporting things. I remember if you read portfolios of the court, there was a section where Jonathan Murdoch, and he explained that it took them probably 6 times serving a household to figure out how this is balanced, because other people forget that, oh yeah, I owe money to the kirana shop, I owe money, so they don't count those as expenses, they forget that, and overall their income, what people might report is, sometimes people have businesses and the money of the business and the money of other people also just goes in a pot. And sometimes they just see, like, they don't see how much they paid out, they just saw somebody paying 10,000 this month, so in my income is 10,000, but they forget, oh my god, I have to pay 1,000 for this, 1,000 for the materials, etc. So, although it's not a perfect science, it just gives like a general idea. So here the idea was not to put anything like we'll do more experiments after, more randomized experiments after, but just to have a general profile in This is the percentage of people who have taken the loan, and the loan amount. So a lot of people are very, take a lot of loans. About 71% have taken the loan from various sources, and the average amount of loan here is 50,000. It varies a lot per state. Karnataka and Maharashtra are much richer states, and you'll see later on that they have much easier access to banks. Actually, finance. And in Andhra Pradesh, the population is much poorer, and they have much smaller loans. Does this resonate with people who work in rural finance? The thing in Tamil Nadu is, this is
the average loan size.
10,000 per in the rural area where we went. That actually I was questioning this exactly, but so far we thought it's probably because the village that was selected was slightly poor. You can go for the type of village.
Sharon, also, Tamil Nadu and Andhra in that sense have got a much larger exposure to SSGs and MFIs actually.
Yeah.
So that the loan amounts will be actually driven down by that factor itself.
Because the diversified.
Even though there are higher percentage of people taking loans, but given that it's primarily that SSG kind of forming and the loan amounts will be much lower.
Yeah. Also, actually, one thing though that actually I don't have here, average loan amount is, this is the average amount taken per loan. But actually, I should put this slide. These AP and Tamil Nadu, they have much more smaller loan amounts, and these are bigger loan amounts at one time. So that can also explain the similar inflation. I can actually explain more than the. So then we have the loan sources. So here, like I explained, Maharashtra and Karnataka have much more access to banks. Actually, this is the banking system. And you have money lenders who are still quite prominent in Tamil Nadu and AP. And I think that comes, the source of loans in small amounts. Probably people take over around the Tamil Nadu and AP more often to money lenders. Like, okay, I'm retired in which is slightly poor, we're going to more detail when we put the final report. So those are some different things. And again, as people who are studying in the financial area, does this resonate? For example, in Karnataka, you have more.
The MFI and SLG pool is very small. How do money lenders do it? Under the SLG penetration is very strong, and MFI also.
Okay.
But here the money lenders is going, money lenders is very high.
The other thing is, that's actually a good question, but the thing is, it might be that the unregistered population doesn't have self-government. Because this is like the selected people who reported this kind of, it could be that there's no overlap between these groups.
Which year data?
That was last year. AP actually was the year before. So, okay, that would be a source. But one thing also we're thinking is it could be slightly different, the population. Actually, just add a little more is, when we saw these results, it came to our mind and said, well, maybe the population for registered chit funds, not unregistered funds, but people who are not part of chit funds at all, or not comfortable with unregistered chit. So afterwards, we actually went to the villages and we randomly selected 100 households of non-users of unregistered among the people who not reported. And next analysis, we compare the results to see if there is a stark difference, and then we might have a different profile among the non-unregistered users. And that's actually one thing I would check to see if they're more like microfinance or something like that. But the money lender point that at the time, probably they had more.
Yeah. Partner in the sense through bank and MFI, the partner.
Yes.
Bank, MFI, then what are the other things? Cooperative banks?
Yes, all the cooperative banks. Yeah.
But Maharashtra, they're getting through banks and MFIs?
Maharashtra has a lot of self-help groups and probably more exposure to banks also. Maharashtra model is a bit different because it caters a lot. It's mostly women that are there. It's a different model. It's called the BZ model. And they have two types. They have by auction, but also they have this random lottery. And it's mostly a group of women that go together. It's almost like a kitchen party that they have. And in that area, they have something called the Pati. How do you call it?
Must be Pati Patni, no? Husband wife.
Yeah. So that's mostly popular among the men for their small business. Because when we saw this Maharashtra model, we said, well, okay, the woman who started, and other places in the Chit or so, only male dominated. And so this Pati is mostly, so it's a slightly different model. But for the reasons I said above, if we want to export the model to other areas, it's an interesting case study to see how the things do this. After that, we asked about their savings. So a lot of people, this LIC is very prominent. Oh, actually, one thing I forgot is most of the expenditure is a lot of people for health reasons. They will take out the Chit fund and purpose to run the thing. For the savings, most of it is LIC. I think LIC has had a very excellent marketing across India. From what I've seen is that those institutions, they don't think they have the benefit. Is the interest rate return very high on that? Because what I was told, it's not that high. It's just because they have a lot of agents in different areas and they're well known in their credible source, so they become an LIC and they don't get a very good interest rate. And probably not even enough to combat like inflation effect of India. Like because inflation is very high. So I don't know what would be the rate of return of the LIC, but from what I was, it's very small, and we actually wanted to bank post office deposits. A lot of people have this, like I mentioned, this post office account, because that's the way to get their subsidized money from the government. Other forms of saving. I remember there's something about agri that's been very popular. It's called agri. Are you familiar with it?
No.
Okay. It's an agri thing. I only see this in other countries. And it seems like someone was just really good at selling a savings account or something like that and followed this agri thing, and they don't have high rate of return also. And the reasons for saving, so emergency, education, household servers, and the emergency was mostly healthy. So that was a huge portion. So and the average savings was 30,000 rupees, which is like quite high, I think, for the it's higher than some people in the US, I think. So, which have sometimes negative savings rates. One thing that came striking is when we talked to the people in the unregistered Chit fund industry, the registered Chit fund industry about that, they automatically said, oh no, we won't be able to get 1 lakh, which is true. They thought the amount would be small, like 5,000, 10,000 much smaller, but the average unrestricted amount is 20,000 rupees for 18 months. It's not small. It's pretty decent. And they're able to give 1,000 rupees per month, actually, as the EMI. And that, the Chit value changes per state. So, Karnataka is actually quite good with the and the 8th, actually, the system. Tamil Nadu is much more population popular. One thing also that we highlighted to the...
There is any geography similarity between the 4 states? You look at Bolaji, it's very highly...
That's one thing that actually I'll highlight. We'll have to control when we're actually going to do more regression analysis to control for some of the characters of the village. They're mostly similar, but there are, because we were constrained by the Chit fund partner company, we have basic characteristics like the average wage level should be on average this type, the village shouldn't be too big, there cannot be any financial institution in the villages. These are similar characteristics. But some areas are more rich in the like that area in Kinanpur is quite poor. It's a drought area. They have this groundnut cultivation. So that is a characteristic that when we do more regression and control the area in Maharashtra being close to Mumbai, I think a lot of factories are opening and a lot of people, like a lot of income incentives coming and they're rolling out. Tamil Nadu, you're right, Bulaji is actually quite good, but still we have like 4 or 5 basic criteria that are distributed across, but there are some characteristics like the type of state, which is agriculture or industry based, could differentiate. Yes, and one thing that they highlighted, to some of the chip fund companies is saying, okay, the amazing thing about the rural area is the math is there. So even if you only have 30% or 10% or even 5% time, because 70% of the Indian population is in the rural area. So then that's a pretty good sizable number. So all you have to figure out, so you already have a market of 20,000 rupees times a huge market access. You just have to figure out how to reduce your transaction costs. That's the thing, and that's something that a lot of people struggle with the microfinance industry. We found we found a solution in one of the areas in Unregistered, but we're testing a technology thing to see how, how can, actually the system was Anantapur, and we had to change partners for reasons we're doing it now in Buteau. Buteau is like this possible industry is stagnating a little bit richer than one, but surprisingly the numbers are similar that we get from the ones we had in 1883, very similar. Maybe just a little bit higher. And what we've done is, there's a company actually that knows well the chip fund industry. We discovered them a little bit late in our project, but we're glad we discovered them. We're actually doing software to manage standardized processes in chip fund companies because it's very informal, paperwork is all over the place. You know, adding down to have to go through dusty counters to get all the data, where your forms, where this, even though they claim we put a document, it's not, it just doesn't happen. And so this software company is very in tune with what happens in the industry, and they have this terminal where it's very easy for the chip fund company in an urban area, like the main office, to monitor, because as soon as the payment is done, it's recorded in their main computer system, and the person gets the receipt, like the chip fund member gets the receipt right away, so it's very transparent. And the person would actually take the money and deposit it like after a week or something like that. So all you need is to have a local, reliable agent. Weekly, come to the city. You have only one time cost to pay fair potential cost or something like that. And you can easily monitor the activity going on with a small terminal. And things go quite well so far with people. So we're testing that and the use of technology. One thing we're also trying to see is standardize the process with the added understanding how to collect information quickly on a central platform to make it easier to see what's going on. Because now, when we show the results to the average chip fund companies, they're quite shocked to see, okay, your members are older than the average bank account holder in the origin. That's interesting, and they're not even able to say. They only remember when the chip person joined you with the client. But what they don't remember, and that persists in their head, oh, this guy's a good client. But the work that Adam has been doing is, some of the people were good like 10 years ago, but they're actually draining now. They're actually explaining a lot of your late payment. And that's a cost to them because they don't charge late fees necessarily. It's more like a relationship thing, so they don't want to lose their client. But standardizing their process, and we should use this type of technology to help them make a difference. That's something we're also working on. That's the big answer to for if the digital or not. But so these are advantages and disadvantages of chips as a formal financial partner with other formal system finance. So 40% of the respondents feel that don't require any formal definition is the most important advantage of relationship. The basic thing is it's very important, it's a very relationship. If anybody does like finance, due diligence, everything is in network. You have to trust the people in your group. In the urban areas with the registered chip, you have somebody like a foreman who actually sort of like collects that information. He's trustworthy to the foreman, but the people in the other members are not necessarily known. It's still relationship based, but not as much as the village. In the village, it's very relationship based. So that's why that it's easy for them. 30% of the not feel that equity or the fact that means timing and being part of the income side is the biggest drawback. So, like I should explain very well, only one person a month can use money. So what happens if one person in the group suddenly has some health problem with their son or their wife that needs an emergency, the other person has to marry a doctor. So what does even if you want to help something like that. And one of the things that now that people are working on the regulation is the chip companies are not allowed to give that extra loan. These are registered chips. Unregistered chips seems to have a mechanism to actually lend money actually to the other person, and they would say, okay, next time you try to win the chip and you reimburse it. And sometimes they charge a small transaction amount. actually how this is something that some companies have felt that prevented their growth, and this is something that other companies claim that it actually helped them grow. Let me explain. So, Sharon is the company that I was fascinated with because they started with this chip company. And after they sort of felt, okay, this model is not going to last a long time because people are going to develop and they're going to want to begging for it. This doesn't always stick. But they also felt that there was that issue, the liquidity issue. And they actually created a separate company called Sharon's Union Finance, which very cleverly gives loan to their chip fund members if they have this liquidity problem. So, and everybody knows that Sharon's Finance is grown very well. And actually, it's a good situation because they know their member, they know the creditworthiness, they actually know that they're able to pay back, it's always relationship based. So that was a strength that they utilized, and some companies actually that we discussed doesn't do well because we've been trying to find a point to address this liquidity issue. Because it is one of the weaknesses of the model, and it's important to see. And a lot of companies I claim that they can't do anything else, and it's more they just could not grow. They're just trying to sort of like get the cream of whatever clients they have, and without trying to find more innovative ways to go around and things like that. Hopefully, maybe the more work we do, and we're actually the type of work we'll be doing on this is these companies that really created sister financial companies to give loans to these people, and we're actually studying this effect. So they have an implementation scheme. Actually, we're given a loan from the sister financial company. And why, etc. Get what time of the scheme is it earlier or after, to see if there's something that we can add to inform policy on that situation. So for now, what people are doing is, here in Unregistered particularly, liquidity institution, 50% of the portfolio they have faced the problem of liquidity. Usually it's friends, family, or money lender. Friends, family, my money lender is actually more distressed. It's not a good necessary solution. Mind you, money lenders have really bad reputation among the people, but I think, even though they say, like, what I've observed is, and this is really anecdotal, even if they claim that they charge 2% a month or 3% a month, and the person has to repay in 6 months, I see that if the person only pays for 8 months, they don't adjust that interest rate. They just friendly, and sometimes it's just like, I cannot pay this month, I'll pay in 2 weeks. And then after the next payment is not really good. So if you look over the year, the person's supposed to pay in 6 months, he paid in 8 months, but he paid that same amount. So sometimes I think you need to adjust in a sense. And I've read some documents, it's still high, but it's more flexible because that was the only thing that explained their utility. And that they still exist, so they still exist. I don't have the interest rate, what people can get here, but you can get pretty decent interest rate for the chip fund. I forget the registered one that starts from, I think the highest would be like 24% interest rate annually.
That's for the first few borrowers.
First borrowers are glad because they're more desperate for money, and if they take that, they have a good advantage. They have very good investment that they can do money right away. But after that, it falls down quickly, and you can get like something at 12%. And if you're close to the middle of the scheme, you can get a huge amount at 0% interest rate. And if you're a saver at the end of the scheme, you can actually get probably 16% return. It's actually quite good if you know how to play around with it. So I hear some people who very cleverly built their house with zero interest rate using chip funds, knowing how it works. Also, like, started their company with the chip fund. Obviously, when the chip fund grows a lot, you cannot use it for working capital because at some point it's not the cost of the money, it's the timing of the money. So, and plus they grow, they probably have to try to get access to banks, Although they do claim that sometimes we're puzzled, like, how can we have access to banks and all, and you're keeping your chips? It's more for the savings portion. Since they're used and generations have used it, it's like their savings commitment and it's helpful. So, okay, I have to put this in that amount. So, liquidity institution. So private money lender, employer, and I get a loan from putting chips in there. That's actually quite clever. The person who wins the scheme said, okay, I'll give you a loan at this amount. So he's actually, and probably not all the loans, probably he lends another amount to the loan. But people are very clever with the money. Like, it's really, people are very smart in it. Safety percent, that's a very important thing. Safety percent unregistered. I'd like to highlight one thing that the first report that we did on registered Chit, we had documented, and I think it came to probably 95% of the users found Chit safe or very safe. And we had interviewed 1,600 members. And that was actually pretty interesting result, because the first thing that people, either journalists, when we went to press conference, would ask us, it came our newspaper. Actually, some guys had news articles that they wrote about Chit, and they said, no, it's not safe. And the thing is, we asked what company, and it was not even a registered Chit fund company, it was not even a Chit fund. And actually, I was with a couple of managers also, and none of the journalists were able to point out the other source that called them, and that number also. We accepted more that number when we put information. The other thing is, I'm going to brag a bit. I'm going to brag a lot. So, when we spoke to our results initially to Pranav Mukherjee. He invited us to discuss about the work we did on the registered fund industry. His first question is, how safe is it? Do you have a sense of how safe is it? This guy is quite clever. Like, he's like very good. And he told the result 95%. We explained the message, how we used it. And then he asked a lot of other questions. He said, okay, fine. And then I think I spoke maybe 20 minutes, and he said, you have more to report? Like, he was like, I said, yeah, we have, so we gave it. He said, I'll look at it. So he did. He looked at it, and he passed it on to some of his members. Obviously, that's not an important thing for him. But it's the first question he asked him very cleverly. And when we saw the results, he was like, it came into more, okay. And when he explained that, the unsafety perception often comes from people who never actually even used the Chit, or not been in the registration, or even unregistered. So the safe based on their own personal experience, and 80% of the response feels safe mainly because of personal contacts involved. And that's very important in the unregistered area. And in our world experiment, obviously the network will also be very relationship-based. Because of the nature of the people there, they would not put their team without knowing the other members for safe, but actually have a sense of them. So we're also sensitive to keep that criteria. So like, yeah, it comes to me. Yeah. So I think we're pretty much okay on time.
Yeah, sure.
Yeah. So this is just sort of like I mentioned, sort of like an appetizer of where we want to go with this. I think we still have a lot of learnings because we looked at results based on like high income, low income, which will control for that state issue also. In the report, actually, I might send it around when we start like, Mr. is not going to speak the truth.
In Maharashtra, Navi Mumbai?
Navi Mumbai, yes, Tanzan is Navi Mumbai. No. These are the places where the registered companies are in the urban area, and it's about 20 kilometers Mohafada. The area Mohafada where the registered companies.
All 4 locations are village.
No, the village only. These are the main areas, like Kalachi is a big city and and it's about 20 kilometers outside. These are the areas where the registered company partners are. And in the report, like, we'll present the results gender-wise, because that differentiates, and we'll present because they use the poverty rates of the World Bank for the definition, we separate between low and high income. And that will also control for a lot of the statewide effects. And maybe the differences in the villages already.
What is the reason Mumbai, Maharashtra loan size is very high, maybe just 2 feet? What is the reason?
The reason, I think they're just better off in that.
That's 19,000 and 190.
But there's very less people that take that home loans. So I think it's one other reason actually, one thing that I included is this is average loan amount, but I didn't include the number of loans.
Loan from informal sector or
I think it's both. So the average loan amount. But the thing is, it's only 23% of the population. Because it's a different model. Maharashtra includes Buteau. And from we've seen this, they're pretty much well off there. This was Mumbai they did it with District also. But one thing actually, now I see this, I'll put the number of loans. There's maybe one loan here, and maybe here there's like 3-4 loans, and that it would be like 4 times 10,000. So that's the thing, it's just the loan amount.
There are 2 more questions.
Sure.
Maybe similarity between farmer and informal or 6. registered state as well as unregistered state. The similarity, why similarity?
Oh, the similarity. No, the message would be the same.
Okay.
But the thing is, the informal sector, the unregistered sector is more loose. So you would have that flexibility of giving you like a loan, for example, or even charging interest if they give a loan at their amount. So you would actually don't have to register for the, actually you're asking for that. It's mostly the same thing actually. They have that basic mechanism of bidding and distributing the money. So that the model is the same.
Same.
There's some variations more in the
Difference like here less documentation, there's no documentation in the unregistered sector and informal sector is registered.
The farmer sector actually they're very government, yeah.
This is under the NBFC, non-banking, you know.
Doesn't follow.
That's actually one of the things we're trying to detect. Under NBFC,
Okay.
and one of the big challenges.
And now they're state regulated.
Yeah.
You have to go to the state
It's a
register.
check on that.
Nice. Yeah.
So that's a big thing. We want to do that.
Is there any cap on the bidding amount?
Uh,
Registered is
yeah.
over 20%.
Registered is now 40%.
Okay.
Unregistered, I've seen no cap. I've seen places actually with different. I think places with 50%. But that's very rare. That's very rare.
Others also makes it like in villages that agricultural schemes that we have heard about in Karnataka, right? That they'll be bidding every 3 months instead of 1 month.
Yes, yes.
Those
So
kind
the
of
cross
things.
cycle.
Oh, okay.
Yeah. It depends, yeah.
Season based on season.
Yeah, that's more flexible. Yeah.
Those flexibility.
There's really nice schemes actually. Like I said, it's not a clever model. In Kerala, we have a lot of these, even church models, where a lot of churches pull together and they bid and then somebody can do it for the people. And a lot of
So mostly the chief gate area, he was the chip funds, right? The action and everything. Who was made? The women or?
in Maharashtra, it's the women
Okay.
that go for the kitty part,
Okay.
and in other states, it seems to be the male, like as the head of the household.
Yeah.
And like I mentioned, in the urban area, it would be like the man would put the chip for himself and for his wife, but then he would save it all, he would do all the fun.
I don't know if it goes to that something pretty possible.
Yeah. So,
How big will the unregistered ones be? How big would each such unregistered check fund be?
usually it's about 20 members.
One check fund?
Oh, no. It's not a company per se. In unregistered areas, often the chip managers do a lot of things. Some people do chip things, some people might be also agents for insurance. They do most of the functions.
Rotation of money.
Exactly. Some people like do other things that I won't suggest here. Yeah.
It's a steady source of income.
Exactly.
They pay the officer.
Actually, one of the data entry operators who's been entering the chip fund data, he thought it was a previous mechanism, he's doing chips with his mother now. Somewhere in the battle.
If you have a steady source of income, it makes a lot.
He really was, I quoted that, was really clever.
Well, he actually went to Baluchari and got all the information from those guys. And when we had gone back to Baluchari and gone with him, and the manager was like asking him all sorts of questions, and he started, what's going on?
So we wanted like that, discovered like, okay, let's start a discover guide. And I think we've seen like a lot of, actually unregistered managers are not very important communication. We had a couple of places where personal contacts that we were doing, particularly this latest place in Number today, they were to a lot of unregistered chip managers, and they actually came to the registered chip auction that we had in the rural area. They actually found us some clients for experiments and helped us build it up because they were interested to see how we were, so that was exciting. But some of the registered chip companies are actually interested in doing something unregistered about persistence, see how it functions, we have it, but that will try to fix it. It's very interesting.
So, what was the size of the industry? I think that would be a
Not the industry, just saying various things. What I could figure out was when you refer to unregistered treatment, it's essentially more of a one-person show.
No, the unregistered members that we had, they could have like 20 people at a time. And we saw people that only had 2 schemes at a time. Just like if somebody needs money, they would start a scheme in the village. Like some person, maybe next year their daughter's getting married, okay, I'll start a chit. So they're labeled almost unregistered chit managers, and they don't have necessarily this company where it says like Sri Ram or Balaji or anything like that. So it's good value actually from our knowledge from what we've seen. Some people do it full time, they have some people just follow the scheme.
So will it be more of an individual development process, or will it be more of a company?
From what I see, it's a one-man show. But that I cannot swear. Like actually, we do not have access too much to unregistered chit management.
This unregistered chit management, how much people discuss chit per item, 2 lakh?
No, often they get to say around 5%. The chit fund company functions not on the profit per se, they get 5% of the chit amount. Now they're starting to push for 7%, and the unregistered managers also seem to be probably getting 5% of the chit amount.
It's across all states or?
It's a statewide,
Yeah.
No, it's in the states where the Chit Fund Act is in place. They're trying to get they only function on that 5%.
What are the expenditure involved in this?
A lot of them, for the registered chits also, they don't do much marketing because it's not. It's probably a lot of like collecting the information.
Collection, the
Yeah.
transaction.
Yeah. Collecting the money also, yeah.
So field cost of import, right?
Yeah.
That's the biggest.
They have some guy pass, because like I mentioned, often like some people, if you don't match what their income is, like in terms of the market people, you might as well have somebody go daily and claim all the amount. Because the guy is wages daily and he knows that this day he can get this amount and things like that. So they have like these agents that go, they know the characteristics of the client, not the business. And a lot of these chit fund collectors, these chit collectors actually they grew into chit managers, and they actually, this Gokulam chit, the head, Mr. Gokulam, he actually started as a chit collector, figured out this thing very cleverly, and then built his own company from it. So you know, the network can know your client. If you know it and you observe, that's the information that
Is there any future in the
Oh, that's a big question actually. A lot of the, I spoke to one of the chairman of Sri Ram, Mr. Ram, who's very active in building like the Sri Ram company. And he was saying that, I don't know if you know this Mr. Chiakarasha, this head, this grandfather type of figure. And he very cleverly foresees that, okay, like I mentioned, there's some point at the chit fund, once development occurs, it won't be as useful, or the demand won't be there. The thing is, I don't think he underestimated that the demand would decrease, but he underestimated when it would decrease. And they never knew that today the chit fund industry is still as strong as it is. So there's a part of the chit fund in Sri Ram that they're still working on, keeping their clients and people are used to that. And the demand is still surprisingly strong for it. We see a lot of the chit fund industry wanting to revitalize. Unfortunately, they're very flush now. They're very comfortable with their clients who are giving them 5 lakhs in chits and things like that. So they don't have an incentive right now, because their next generation anyway, to see, okay, how can they modernize? But there is a group of, especially the general secretary of the Chit Fund Association, he's very good to modernize the system and to see, how can we still utilize it and make it grow. I remember there's a lot of reluctance though. The desire, the willingness is there, but the change takes a long time. But there's a speech that Professor Buteau had done to the chit fund industry, and he had labeled them like, okay, these guys are dinosaurs. And he showed them like the genetic information, and that really scared them. So after that, they were more open. Because I find it very interesting because it's a mixture of economics, finance, and almost anthropology. When you go to these villages, all these clever ways that people have figured out, and it actually does work because a lot of people grew from that. You see this Murugan Idli shop from Madurai, they actually started also in chits. They started coming by small chits and they grew. And I can take a lot of examples like that. That's quite interesting. And I don't know much about microfinance, but I don't know how many success stories. Maybe microfinance industry is too young, yet to show like long successful because it's been doing for decades. So they have that 40 years of people being able to grow. Let's see how it goes. So anyway, if anybody has any comments, feel free to buy it, and I'll let you know when we actually our report comes out on this aspect, and also the follow-up on the rule experience, how did the rules keep going. So I'll have like probably another smart session.
Yeah.
It's a follow-up.
Wonderful, yeah. Thanks a lot. So, ladies and gentlemen, feedback. Please give us some feedback.